Hello and welcome. What a downfall it has been in the Indian stock market today. And decoding it for us is Shivaji Vitthalrao, founder and CEO of Samarth Wealth Management. Shivaji, I want to really understand from you what exactly is happening. The markets are on a free fall. Is it time to be scared?
Well, not at all. I think it's a great opportunity in my point. In my view, we should be looking to invest. And if you look at the stocks and the sectors which are holding the March lows, I think they offer a great, risk reward in my opinion. And one should be looking at stocks, which are having a good relative strength. Going forward, we will definitely come out of this mayhem which is already happening in the markets. India should do well. It all depends on what Trump does going forward. But ultimately, it's going to be a short term impact, which is always there in the market in such situations. But the medium to long term picture looks pretty strong. So I would be looking to invest from here.
What is the candlestick chart telling you? When do you think Nifty will hit an all-time high once again, or probably a V-shaped recovery will begin, if at all?
I would not expect a V-shape recovery over here. I think we have broken the March lows with respect to Nifty. So Nifty might spend some more time to form the higher bottom technically. Okay, so that's going to take some time, probably a few weeks or few months. And if you look at some sectors like banking, financials, PSU banks, oil and gas, and energy, they have not broken the lows. Sectors like pharma, IT, auto, and the FMCG, they have broken the lows. So I think those sectors will take some more time to turn around. So the heavyweights is from the financial, which has a 38% weightage. The IT would be the next. IT is in bad shape. I think IT is going to take a longer time. So it has to be banks which has to lead the rally from here. And technically, they are looking pretty strong. I would see a V-shaped recovery, or I would say a better chance of getting a good bounce in banks compared to Nifty. So Nifty might spend some more time here, and ultimately the financials will do well. Technically, the 23,800 is the last top, which is 2,000 points away right now. Because of the gap down, it has gone to 2,000 now, right? So it has to cross that level to give you that turnaround. Actually, that's pretty far right now. I think we would like to wait some more time with respect to Nifty.
Okay. Which, if I have to ask you, five sectors or two sectors rather that investors should exit right now, shouldn't stay there at all?
I think the IT has broken pretty badly, and the pharma is also breaking down. I would not say exit right away. One can wait for a bounce, at least a meaningful bounce to exit. I think they're going to take longer time to come back. Those two areas are also hit by the tariffs by US, and the Nasdaq was really hit hard. So that impact is there in the IT sector. Plus, there was some news on the pharma, and we saw 5% gap down in the pharma index last Friday, and today also we are down. So I would not like to stay in those sectors. And as I said, I would like to prefer sectors which are holding the previous bottoms technically.
Which are the two sectors that you will buy in right now at this stage?
I think the energy sector and the financials. Financial includes the NBFCs, private banks, and the PSU. I'll put it in the whole pack, and the energy sector, including oil and gas and the OMCs.
Okay. Can you give us about three to four stocks from banking that you're bullish on right now?
Yeah, we are looking at private banks as a strong contender to emerge as a leader here. So we are looking at HDFC, we are looking at ICICI Bank, and from NBFC space we are looking at Bajaj Finserv and Bajaj Finance as well. So I think these four stocks are on our radar. And also, if you look at Nifty Infra, that is also not broken the previous bottom. If you look at Indus Tower and the Bharti Airtel, I think they are still doing pretty well despite so much fall. So we will be looking to check these stocks for any potential investments. Disclosure: this is not a recommendation for any clients.
That's absolutely understandable. Would you like to share with us the targets for these stocks that you just mentioned? Probably the near-term targets that you can look at as far as these stocks are concerned.
As far as SDFC is concerned, we are looking at potential 2000 to 2100 in next 6 to 12 months. ICICI, we are looking at 1500 to 1600. Bajaj Finance, we are looking at 9500 to 10,000. And the Bajaj Finserv, we are looking at 2200 to 2400 over 6 to 12 months. Bharti needs to sustain 1770 to 1780. Once that level is crossed, I think we are pretty much open for 2000 2100 target. And Indus Tower, if you look at the technical chart, it has not crossed 450 levels from last 10 years. It's on the verge of multi-year breakout. I think the stock needs to sustain 368, 370. Of course, it did well last Friday. Unfortunately, because of the gap down, the stock is trying to recover. Once it crosses 370, we'll be in a position to test 450 levels, and thereafter a new bull market we are expecting in this stock.
In Indus Tower especially, you're saying, is that? Can I ask you that same question about Nifty? When do you expect the bull market for Nifty to resume once again, if at all? We are talking about something like, what happened in COVID, that it fell so much, and at one point, then we had investors saying that the mother of bull markets is going to start. At what point do you think we will be able to say that the mother of bull markets is beginning once again in Nifty?
See, ultimately, a new bull market will start about 26 to 77. That was the previous stop. Okay. In order to even change the trend, we need to cross 23,870, which we hit recently. So that's going to take some time, because after a very large run up, if you look at 2021 rally, which ended at 18,800, after that we went sideways for 18 months. We corrected 18%. Right now, also we corrected 17%, which is quite similar. We are in a situation which is quite similar to 2022. A new bull market started after a technical pattern being formed, like a cup and handle or a triangle. Something like needs to be formed on the technical chart. That is very far right now. We might spend some time. As I said, a lot of stocks are beaten down. Only the banking sector, which is looking very strong, which will not be in a position to lead the market to all-time high right away. I think maybe the second half we can get some clarity as soon as we test 26 to 77 for the first time, and a dip post that will show some signs for a new bull market that will take us to 28,000 to 30,000 levels. But that's going to be like 1 to 2 year time frame at least. For that to happen, we need to form a structure technically. That's going to consume some more time.
So you're necessarily saying that by 2027, we should be looking at Nifty forming a new high sometime.
It's possible maybe in the first half of 2026 also. But it all depends on when we cross 23,800. If we cross it quickly, then we have a better possibility to test the previous highs. Then another 4 to 6 months time to form a handle or a higher bottom to start a new bull market.
Shivaji, one more thing which the story that is emerging from the Asian markets today is that Chinese markets are down. I mean, Shanghai is down, Hong Kong is down, Japan is down, India is relatively lesser down. So does that make India a brighter spot in this entire mayhem? And because of that, do you think the FIIs will finally start returning to the Indian markets?
If you look at the global charts, when the European markets or the Asian markets were doing well, like for example, the Hang Seng, when it did 52-week high recently, we were minus 16%. We were at the bottom of the price wise chart. Okay, so you look at the US charts, they were at 45,000. We were at 22,000. We were down 16%. All of these markets were doing well, and they were at all-time high. If you look at Europe 50, it was a 25-year breakout. Now, if you see what has happened in the last 1 week, they have corrected pretty sharply. They have gone down by 15%, and right now the futures in US are showing 3% to 4%. So those markets could correct another 2 3% today due to the panic. and we had already corrected in the past. So we are correcting less. And if you look at the ratio charts of Nifty versus Dow Jones, that trend has reversed. The Dow Jones is down roughly 10% in the last two sessions, and if we include today's session, could be at 12%. So we have fell 6% in the last couple of days from Friday, I would say. So relatively, we have a better chance to come back. And if you look at the DXY, it has broken down, and India will get its own share of allocation with respect to FI investments. I think emerging market index also, if you look at, India has a good amount of allocations. That chart is also turning around. So going forward, if I put it 6 to 12 months, India will definitely have some allocation from the FIIs. The US dollar is also, going down. That is a positive things for India, and the RBI could come up with, good liquidity infusion, probably a rate cut as well. So I think there are a lot many positives. It all depends on what Trump does this week. That could form a panic bottom. And if you look at the CBOE VIX, which is the volatility index chart, it could be hitting the top somewhere around 50. So that could signal us the panic could be over, and we can have better days going forward.
Shivaji, one very, very personal question. Every day the market is in a bull run. I feel like opening my mutual fund portfolio and, having a look at it, how much, profits I've made over the past one day. These 2, 3 days, I've just not been wanting to open my mutual fund portfolio. What is your advice to stock market retail investors like me who are right now probably a little disillusioned with the returns we've got? What should I do?
Well, it's a tough time for the retail investors. I think you need to reassess your portfolio at this point in time. Look at the stocks which are looking relatively weak in this market. On the bounce, one should try to exit them and move to possible leaders. Restructure your portfolio. Make sure you come out of these losses pretty soon. Otherwise, if people are stuck with mid caps and small caps, which are down by 40, 50%, I would say it's going to take more time for them to come back in the game. Um, or else, one should continue the SIP at this time. Average it down if the stock is fundamentally good and technically good. So one should go for that and wait for some time. Market could, recover from these levels in coming months, and that should give them exit route.
Wonderful. Shivaji, thank you very much for joining us. We'll keep tracking the markets with you and hope that the market really forms that bullish chart pattern someday, and we will then talk to you about some positive things. Thank you very much, Shivaji.